broadly comprise of or broadly require businesses to undertake two filing obligations. One is an initial notification obligation, and another is if the regulations apply to a business entity, then filing an annual report. So basically, these economic substance regulations do not apply to all types of businesses. They apply to certain types of businesses which are defined as relevant activities under these regulations. So the first action that needs to be taken by any business is to make an assessment whether actually the economic substance regulations apply to that business or not. So that depends on the various definitions, the nature of the business, and other considerations. Then, if the regulations apply, then what is the first reportable period? It depends on the financial year end, because these regulations have a retrospective effect in the sense that these regulations apply to financial years which have commenced from 1st Jan 2019. So the first reportable period is important because that once again leads to the determination of first annual report. There's an initial filing requirement that needs to be filed. So now currently our various authorities have announced a notification to be submitted to them. The notification basically is a confirmation whether an entity is carrying on a relevant activity or not. If they are carrying on that relevant activity, then certain other details. Now, while filing the notification, it became immediate regulatory requirement, and failure to file within the deadlines, which are, so far DFC is concerned, is June 12th, and then so far other pre-zones and other authorities are concerned, the last date appears to be June 30th. So the immediate requirement would be to file this notification. But at the same time, it is necessary to make for those entities which are actually governed by these regulations to make further analysis, whether they are actually meeting the economic substance test or not. If they are not meeting the test, then is there any need to make any changes to their business model or organization, or how to comply, because one should ensure that they comply with these regulations. And there's an annual report requirement. So basically, we'll be dealing with these 6 aspects very quickly. To start with, let us try to analyze what is the first reportable period. If there's an entity whose financial year commences on 1st Jan 2019, the financial year end date is 31st December 2019. So the first reportable period is already over. These entities need to necessarily submit their annual report within 12 months from the financial year end, that is 31st December 2020. In between, before June 30th, the various authorities have required filing of a notification. And so for DFC is concerned, 12th June 2020 is the last date for filing the notification, unless the deadline is extended further. If there is an entity whose financial year is from 1st April to 31st March, then the first reportable period will 1st April 2019 to 31st March 2020, and then 12 months from 31st March 2020, that's 31st March 2021, will be the last date for filing the annual report. This reportable period is very important because the economic test has to be complied with, or the requirements have to be met within this reportable period. The first reportable period is already over. There may be cases where the economic substance test or economic substance requirements may not have been met by quite a few organizations. So with this background, that there are two requirements to be met, and also for those entities which come under these regulations, there's a need to meet an economic substance test. We will just quickly have an overview of what the regulations are. The regulations require that every licensee which carries on a relevant activity as defined in these particular regulations, whether they are a free zone entity or a financial free zone entity or whatever, whether they are a partnership, whether they are a limited company, whether they are a branch, they need to meet the economic substance test. Then, if there are more than one relevant activity, then necessarily the relevant activity for each of those things determine the requirements of economic substance test. What is more important here is how these regulations have to be interpreted. Whenever there are regulations, any law, for example, there are certain principles by which they will be interpreted. Though they may they appear in plain English, actually there are certain legal concepts behind it, regulatory concepts behind it. Therefore, these need to be construed according to those principles. Sometimes these principles are available within the legislation itself, and sometimes these principles have to be brought in from external sources or external legal principles. In this particular case, after the cabinet resolution passed, resolution 31 of 2019 on 30th April, subsequently on or about 11th September, a detailed implementing regulations have been issued via resolution ministerial decision 215 of 2019. This ministerial decision of 215 of 2019 actually clearly lays down how these regulations have to be interpreted. The first thing what they made it clear is substance prevails over form. That means we need to look at the real things, not just a document or a license content to determine whether a relevant activity is being carried out or not. They also lay down clearly to the regulatory authorities while clarifying the functions of regulatory authorities under these regulations. This 215 of 2019 directs regulatory authorities to adopt strict yet pragmatic approach to satisfy the regulations' objectives. So, when you say strict legislation, it means that it is a case of literal interpretation without there being any external aid. The only additional thing appears to be the word pragmatic, but we have to be very careful there. This is a direction that's with regulatory authority. The regulatory authority is required to adopt a kind of pragmatic approach. The approach is to satisfy the objectives of the legislation. The objectives are very clearly laid down in 215 in the introductory portion. These regulations have come on account of certain OECD standards. These OECD standards are to curb harmful tax practices. So the objectives of this particular legislation is to ensure that any structure or any activity which comes within the relevant activity definition or whatever it is should be examined from the perspective whether there's a potential tax evasion or avoidance in that structure or in that operation. So the regulatory authorities will be adopting that kind of an approach to satisfy the objectives of this particular regulation. So it is necessary for us to understand what regulations are trying to achieve by these regulations, so that it becomes very clear for us to what needs to be done. Now, broadly, the relevant activities fall under these 9 categories. Banking. Banking essentially means accepting deposits. Insurance and investment fund management. Finance or lease finance. Headquarters business. Shipping. Holding company. Intellectual property. And distribution service center. While banking and insurance may look clear, and investment fund management, the finance and lease finance business has been further explained in the relevant activities guide published by the Ministry of Finance. It looks as though any credit or finance transaction, which may not necessarily be a lease finance transaction, may also be looked into to see whether they fall within the definition of relevant activity. Headquarters business is offering senior management services or assuming a risk on behalf of a group of companies. This type of activities, all those activities irrespective of structure, as long as they are carrying out headquarters activities in relation to their group, then they are covered. So the headquarters activity essentially applies in a group structure. Shipping, it is connected with the operating of a ship. Holding company, once again, holding equity shares in a subsidiary or company. Intellectual property business, once again, because there are a lot of gray area surrounding the rights of intellectual property exploitation, the way in which license fees and all those structures are there. There are several requirements to be looked into to see whether that intellectual property business falls with the relevant activity, and if so, what are the regulatory requirements. Distribution and service center, this is one particular area where distribution, of course, trading of goods. And so service center, any consulting or administrative service to a foreign connected entity will come under the relevant activity business. So what are the tests? If an entity falls within these regulations, then they have to carry out their substantial part of the business within UAE, so that these activities have been defined in the regulations core income generating activity. So these entities have to carry out conduct as the state core income generating activity. Within this UAE, or in the case of financial free zone, because the license is restricted to that free zone, or any other free zone where license is restricted to that particular free zone, that activity needs to be conducted within that particular free zone. And this entity needs to be directed and managed within UAE, and there should be physical presence, and there should be adequate number of qualified full-time employees to conduct this activity, and there should be adequate operating expenditure, and there should be adequate physical assets in the state. When we see the word adequate, actually is a test of adequacy. It actually means proportionate to the kind of activity that's being conducted. It once again goes to the actual activity that's being done. If we take banking, these are the core income generated activities. For the interest of time, I'm not going through each one of them, but the main activity of a bank, of the main activity of insurance company, or main activity of investment management, lease finance, those need to be necessarily carried on within the UAE entity. Similarly, for non-financial some relevant activities as well, the headquarters, shipping, holding company, intellectual property, distribution center, these activities need to be carried on within UAE. Now, this is one particular test. In addition to carrying out the activity, the direction, supervision, or the key decisions, everything need to be taken within UAE. If it is a company, then there should be a board meeting that should be held with directors physically present. At least minimum quorum members should be physically present within UAE. And more important part is the directors must have necessary knowledge and expertise to discharge their duties. The director's qualifications are involved. Similarly, full-time qualified employees, the qualifications of the employees. And then those need to be necessarily carried on within UAE. This is how the directed and managed test will be applied. Now, as I said, the first notification requirements have already been announced by various authorities. This notification actually has first part is to confirm whether an entity is carrying on a relevant activity. And if it is carrying on a relevant activity, then further questions will be whether the entity's any part of its gross income is subject to tax in any other jurisdiction. What is the date of end of financial year, and few other details which are appearing now on various portals. If an entity is carrying on a relevant activity, then within 12 months, that is after the end of the reporting period, within 12 months from that date, they have to necessarily file an annual report. The annual report should contain amount and type of income, and then number of full-time qualified employees with qualifications, who are the persons responsible carrying out the relevant activity, and then a declaration that actually the entity is carrying out the relevant activities. So if it is an outsourcing arrangement, then what are the outsourcing arrangements, those details. So to prepare an annual report, necessarily the entity must make a very clear examination and collect all the evidence that is required to ensure that the whatever information that is being furnished to the regulator authorities is correct, and that they are meeting this particular test requirements. There are penalties for contraventions. Broadly, if there's a failure to notify, there's a penalty. If somebody doesn't file a notification, so for example, DIFC. In addition to this particular penalty in DIFC, under operating law, there's a $25,000 fine for entities who don't file the notification. So there's an additional penalty that is there for in certain jurisdictions. Otherwise, the general penalty is anywhere between minimum of 10,000 dirhams to 50,000 dirhams for failure to furnish the notification or failure to provide accurate information. And if there is continuing failure, then there are further consequences like reporting to the relevant authority and also additional fine that may be imposed. So the consequences are quite serious. So it is necessary for every entity to comply with. So we just try to keep this presentation short while we open the this thing for discussion at a later point. I just request Marcus to continue the next part of the presentation.
So thank you very much, Das. So would you like me to start or?
Yeah, start, please start.
Okay. Would you mind to share your screen, or shall I share my screen?
I can share my screen, no problem.
Much easier.
Yes.
Okay, fine. So let's see whether it works. Yeah, fine. Okay, so well, thank you very much, Das, for the start of this for this event. Yeah, my name is Susilo. I'm a tax partner with Crowe in the UAE. On top of that, I'm also sitting in the EMEA Tax Committee of Crowe Global as well. And that's why it's quite interesting to see also the development of this economic substance regulation, which is part of the PEPS action that is being implemented in the UAE. Now, in terms of my session now, I will try to make it as much as possible interactive together with my colleague Michelle. So we're going to talk more about the risk of managing business digitally, especially when it comes to the directed and managed tests. As you are aware of, it has been practiced for many companies where you have, let's say, especially for foreign entities who have their presence here, whether it's subsidiary or branch offices, that you have the management sitting in the other country, and decisions are made not in the UAE but made in the other country as well. And Das has mentioned this briefly, that there might be the case that if you continue with that kind of practice, then you might, if you are subject to the economic substance regulation, then you might not pass this directed and managed test. And based on our experience when dealing with, let's say, some of our clients, we do see already that that this has actually shown such risk. So that's what I'm going to discuss today. And before I go into this, let's say, this topic, I just would like to share with you some of the deadline for the notification that that has been announced by the regulatory authorities here all over the UAE.
Any questions or comments on box?
As does.
I'm not on the screen because I'm assisting Marcus. Yeah.
Does as Mr. Das basically said earlier, the information is very fluid now in terms of the deadline. So that's why the information that you have now and in the next slide, which I'm going to discuss further slide, is that it might it might change in the next couple of days. So I just want to summarize what I said earlier in terms of the filing obligation. Now, under this regulation, basically you have to notify your licensing, let's say your regulatory authority, whether you conduct the economic, the relevant activities or not, or whether you are subject to this regulation or not. And this is currently the deadline that is approaching for different companies, different companies in different locations in the UAE. Now, if you are subject to the substance regulation, then what happens is that you need to then later on, so before the end of this year, depending on your financial year end, and then you need to submit this economic substance report, which basically a declaration that whether you pass the economic substance test or not. So that's please the next slide. Yes. So, okay, fine. As of today, basically we have seen those deadlines that have been announced by various authorities. Now, this list is not exhaustive, and we're planning to post such lists in our website. So I do encourage you to visit our website if you are interested to know about all of these deadlines. But I give you an example. There are two authorities that we have approached already. There are Dubai Silicon Oasis and Dubai Airport Free Zone, where the deadline of the notification should have been on the 31st of May. But apparently there has been some extension, and the extension has been given today. And if you are, or if you have companies that are located in these two jurisdictions, I would strongly encourage to contact the authority if you have not submitted the notification to ask what is the actual deadline. Now, the official circular from the Ministry of Finance for the notification is that they're saying, that it has been extended until the 30th of June. Now, it is my personal opinion that maybe most of the regulatory authorities are going to follow this circular from the Ministry of Finance, that they are going to extend the ESR notification deadline up to 30th of June 2020. However, this is again at the discretion of the regulatory authority, which is then the licensing authority, whether or not they're going to apply this deadline, or they're going to ask for this information earlier. Like if you have seen DFC, they have asked you to file the notification before the 12th of June 2020. At least I have not received any deadline yet. So that's the next slide, please. Now, before I can start, is Michelle already in this?
Yes, I'm here.
Yes. So, Michelle, if you don't mind, maybe you can continue with this the economic system requirement test in terms of directed and managed, and maybe in the next slides to share a couple of examples as well we have seen.
Okay. So the economic substance test consists of different requirements. You need to perform core income generating activity. You need to meet the managed and directed test, and you need to meet the adequate test. An adequate test, that means that you need to have adequate staff, adequate expenditure, and adequate premises. Now, in the next few slides, we will focus on the directed and managed test only, because in practice we have seen some challenges with this condition, and because this directed and managed test says that you need to have board meetings in the UAE with your company. At least one board meeting needs to be taking place in the UAE, and the quorum of your board meeting needs to be there. And it means that also the board members that are holding this board meeting need to be physically present in the UAE at the time the board meeting is taking place, and the directors need to have the necessary knowledge and expertise. So this is what is required for the managed and directed test. Maybe we can go to the next slide. Now, there might be challenges because companies are nowadays sometimes managed digitally, and companies, especially the ones that are operating internationally, some of the board members may not be residing in the UAE, some of the board members may be from outside UAE or might be traveling all the time. So it might be challenging to meet the managed and directed test and have the quorum of board members physically present in the UAE at the moment that the decisions are taking place. So what can be a challenge is that, for example, as I said, that the board members are not physically present at the time, but they're meeting through conference call. That's what we've seen with a few clients. One of the challenges might also be that the documentation is not recorded properly for the board decisions. Because it's also required that you need to have minutes of your board meetings, and those need to be saved or kept in the UE. So that might also be a challenge, or it might also be a challenge that no board decisions are taking place in the UE whatsoever, but another company higher up in the corporate levels are taking the decisions. That's also one of the examples that we have seen in practice. Okay, I think we can go to the next slide, or maybe you want to add something more.
Yeah, I would like to add something over there, just for the previous slide. So basically here, if you look at the regulation of well, this economic substance regulation, is also very important to understand the company laws or whatever governance, let's say corporate governance law that is applicable in the jurisdiction that you are located. Right. So I've heard from Mr. Dasset as well that you mentioned a couple of them, but the DFC. So it is very important to ensure that that what Michelle has mentioned in the previous in the previous slide, that it is in accordance with what is allowed by the DFSA company law. Sorry, DFC company law. Especially when it comes to the documentation, because we have seen, you know, certain companies, especially the non-DFSA regulated one, that the documentation might be a challenge when it comes to the board meetings and all of the other decisions that they're making. Yes, Michelle, please.
So what kind of solutions can there be to meet the directed and managed test if you currently do not meet the directed and managed test? For example, you can have a look at your top management, who's actually making the decisions. Is it people from outside UE or is it people from inside UE? Maybe the quorum of the meeting is not met, so maybe you need to make some changes there so that the quorum is physically present in the UE at the time that the decisions are made. You can also have a look at who's actually making the decisions. Is it the manager, or is it the board, or is it people that are sitting in the UE, or is it actually de facto, is it a company that is outside UE that is making the decisions for the company? So you can also have a look at who's making the strategic or who's making the decisions of the company. And also, as Martin already mentioned, you can also have a look at the documentation side. So how are the board meetings recorded? Are there minutes of the board meeting? Are these minutes kept in the UE or are they kept outside UE? So also from the documentation side, there can be the risks can be mitigated by having proper documentation in place.
Yes, well, thank you, Michelle. I think this is the our last slide, right, Das? If you go the next one. Yeah. Okay, I will give it to our senior partner, Saad Maniar, who would give his closing remark for this presentation. So Saad, over to you.
Yeah, before that, I think few people have asked questions. So maybe yourself and Mr. Das can answer those questions before we formally close this webinar.
Sure. I think we have a few questions. The first question is, Marcus, if you could see in this chat box.
Yeah, I'm trying to see. Yeah.
If the income arising from the relevant activity is minimal or immaterial versus overall the income, would the entity still be subject to satisfy requirements? I don't think there's any threshold value for it. Even if 1 dirham is there also, necessarily, you know, they have to come.
Yeah. No, I think I would like to pass this to Michelle, because we do have experience. We have seen this with some of our cases. So I think there is a definition of as when the income shall be regarded as or shall be regarded to construe a relevant activity or not. Michelle, would you like to comment generally on this?
Yes, so there is no minimum amount mentioned in the law or in one of the guides that is issued. That is necessary to perform a relevant activity. However, in the relevant activities guide, it is mentioned that if an activity that you do is one-off, so it's not in the normal course of your business, then it might not be seen as relevant activity. Whereas if you do it in the normal course of your business, and it is not a one-off activity from which you receive this income, then it will be a relevant activity. So it will really depend on in which capacity this activity is being carried out. If it's a one-off thing or if it's continuous that you're doing in a normal course.
Yeah. So that actually brings to my next, I would like to add this to Michelle's explanation. On the surface, it seems that this regulation is quite a straightforward one, and especially when you just fill out the form. However, to answer every single question in the form, whether it's notification or at a later stage in your substance report, if you're subject to the ESR, then you need to really think it through and see what will be the impact, and yeah, and whether to give the whether you are actually giving the right answer or not. Shall we answer 2 more questions that we have here? I think Das? Mr. Das?
Entity is authorized to carry on relevant activity but has not carried it out in the relevant period or earned any income from the relevant activity. While notification would be required, is still a reporting required?
Okay, fine. Then I will answer this. I think the question here is that let me try to summarize it. Is that whether an entity is licensed to actually conduct relevant activities, but they have not generated income for the relevant activity, whether they still need to file notification or not. Now, if this is if my understanding is correct, then yes, you need to file a notification, because at the end of the day, the Article 8 of the 8.1 especially of the Economic Substance Regulation states that all let's say a licensee has to notify the regulatory authority whether or not that they actually perform the relevant activity.
Yeah. Next question is, I understand insurance brokers category 4 in DFC do not fall within the definition of insurance business and accordingly would not be required to comply with the reporting requirements. Please confirm. Yes. There's a guidance. The guidance says that insurance brokers are not covered. So
I would like to make one comment there, because how about MGAs who are underwriting risks on behalf of other parties?
Yeah.
Because under the ESR, it is mentioned that one of the core income generating activities is that you're underwriting risks.
Yes.
And since MGAs are underwriting risks, they might fall under ESR.
True. If it is MGA, pure insurance brokers who do only insurance intermediation license under DFC, they don't come under that. If they have an insurance management license, then they may come under that. So that's the distinction.
So I think
if you're an intermediary in the insurance sector, you really need to look at what kind of intermediary you are, and if you fall under ESR or not. It doesn't mean that because you are intermediary that you do not fall under ESR. You still need to do an assessment.
Yes.
Yeah. I think it's going back towards again what the Ministry of Finance also mentioned in the clarification on the Q&A, is that it is very important to understand the substance over form of what exactly you are license and what exactly you are doing. So the de facto and the jure is very interesting to see where the gap is, and the de facto is something that is really need to be taken into consideration when dealing with this regulation.
Next question. If a holding company granted loan to its subsidiary and accordingly its sole source of income is loan interest, will it be considered conducting relevant active lease finance business, even though it is only licensed as a holding company? I think this is coming on account of the relevant activities guide published by Ministry of Finance. While in the definition of the regulations, they said that lease finance business as defined under the law of the state. So it looks as though under the guidance, they have extended to almost any kind of credit transaction, whether they are connected with a lease finance or not, because lease finance necessarily involves an asset. Even without asset, also suppose a loan is given, what is it? So that's his question.
Excuse me?
Yeah.
Yes, hello. I asked this question actually, and I noticed that in the beginning when they set the rules for ESR, I understood that it was an activity that you have to be licensed for. But once you see the guidance, it seems it could be any activity that is done by any company, even though you don't have a license for. So I just want to know, because, for example, in your presentation, you mentioned this this relevant activity in the finance section and the finance regulated section. So yeah. This is why I'm a bit confused.
See, let me try to clarify that slide. Any finance or credit transaction that is done by way of business necessarily needs to be regulated. If it is within DFC, it is by DFSA. If it is outside DFC in the mainland by central bank. So that is where it is included as financial service. That is providing loan by way of business. Now the question here, what you have is that on account of very specific definition under the regulations saying lease finance business as a relevant activity. When you look at the definition under the regulation, it says lease finance as per the law of this state. There's a separate lease finance law that's available in UAE, whether only those transactions are covered or further transactions are also covered. There's a bit of gray area on account of this particular relevant activities guide that has been published by the Ministry of Finance. So in this particular case, you need to look at the broader purpose, because there's an interpretation guidance that is given. A strict but pragmatic approach has to be followed. This is the guiding principle. While giving literal interpretation to the regulation, you need to have a pragmatic approach as well. So in a case like this, you need to invoke the broader this thing to see what is the purpose of this regulation, ultimately to curb a harmful tax practice. If this particular transaction has a potential for harmful tax practice, and then definitely you need to be regulated by this regulation. And if it is only a small financial transaction which has nothing to do with some harmful tax practice, then you can construe that as. But this requires an examination of the agreements, how they are structured, what is the language that is used. So many details we need to go in. It's a good question.
Okay,
that's one gray area where we. Yeah.
Yes, I noticed. Thank you very much.
That's it. Mr. Jiten and Sarah has raised their hands for questions. So if you could answer their queries before going back to the chat box, that would be good.
Yeah.
Yes, Mr. Jiten, you can ask your question right now.
Yes. Hi, everyone. I just want to ask one thing. If the entity has shareholding in the GP structure, so does it fall under holding company relevant activities?
Yeah, you're talking about the GP of a fund, isn't it?
Yes.
Right.
So if the entity holding the shareholding in the GP and as well as the we are the fund manager of a fund, which comes under the GP.
The GP is no doubt a holding activity. But when you look at the overall this thing, the GP is being the holding is DP is for the purpose of investment fund management.
Yes.
So when you look at, it's part of the structure, that investment fund management structure is, a GPLP structure where probably the investment fund manager or an intermediary vehicle is having a holding on GP. In many cases, actually, there will be an intermediary vehicle also between the investment fund manager and the GP. Only it's a legal structure they have. So that's you should construe the whole thing as investment fund management business. And you should also apply the principle that where there are multiple relevant activities, it is not necessary to actually file separate reporting for each one of the relevant activities.
Okay, so if we are holding LPs or GPs, or if we are holding other funds, so we are not falling under holding company relevant activity. We are just falling under investment fund management business activity.
Yeah, I mean, when I say well, I'm just saying a very broad thing, but I would like to see the entire agreements, before we can conclude that, because there are a lot of finer distinctions that may apply.
Sure. And my another question is, if we do not have any income from the relevant activity, we still have to file the report, but we do not have to demonstrate substance.
Yes.
Okay.
Thus, I would like to add that, because I think this is the second question about holding company. So to determine whether your entity or the licensee is dealing with the holding company business, is that one needs to really look at it in a very narrow definition. Because as soon as the entity, or sorry, as soon as the licensee is doing something else apart from the holding company business, when it comes to the revenue that you earn, then it might fall under a different category and not anymore holding company. Because under holding company, of course, there is a certain regulation that you need to meet under our economic substance regulation that differs from the other relevant activities.
Okay.
Marcus, one incidental thing to that could be, suppose assume for a moment that the entity is holding is actually a holding company, but other activity, whatever that is doing, it doesn't fall within the definition of a relevant activity. Then necessarily, that to the extent of the holding activity that is there, then the economic substance regulations.
We have shareholding in the GP just for the structuring of the fund.
Structuring of the fund. In your case, it comes under overall investment fund management activity.
Yeah. Okay, that's great. Thank you.
Yeah. Another question?
And the next question would be from Ms. Sarah. Are you there?
Yes, I'm there. Good afternoon, and thank you for holding this presentation. I have a couple of questions. The first question is, when the Minister of Finance have issued some clarification about the types of business who are considered to be holding relevant activities, under headquarters business, they have mentioned that there has to be a decision-making functions and management of a foreign-related company. So I want to understand what constitutes a foreign-related company. How is it decided? Is it based on ownership, or how is it decided?
Yeah, the connected person has been defined under the regulation. The key there is control, common control, or the some shared controls. The control is the key, not some percentage of shareholding or any such thing.
So we can consider common directors as a common control?
Yeah, assume for a moment there are a common board of directors between, one particular company, which is UAE, and another company, which may be there in Bahrain or some other place. Okay, the same set of people are controlling both. Or there may be a common holding structure, a common ownership ultimately the owner providing the ultimate directions as to how these businesses need to be managed.
Yeah, regardless of having zero shareholding relation or interest between the organizations.
Exactly. The control is the key thing. We need to look at the control.
Yeah. So my second question would follow: if the headquartered business is providing those management services for the foreign related company or entity, but again is allocation of cost. So the income derived from this management services only again is, satisfying the cost that it's incurring, but not for getting any profits out of it. So would this constitute again, assuming headquarters businesses, and would this trigger that we need to file the notification and again we need to submit a report even we're not generating a profit out of it?
The gross income, as clarified by the guidance, says gross income in whatever form or whatever source, and even reimbursement of expenses should be considered as an income in this particular case. Because in many cases, reimbursement of expense, operating expenses will be shown in the accounts, but in reality, that constitutes an income.
All right, noted. I think one last question I would still have is there any relation between this economic substance regulation and the country-by-country requirement or reporting? Because for an example, if I have UAE-based companies which are ultimately held by a BVI company, and the BVI company is filing for ESR and is filing for country-by-country reporting, so is there any connection or relation between those both?
Marcus.
Administratively, no, because these are two separate requirements. When you look at, but however, if you look at the 15 PEPs action plan, it is somehow related. Now, the country-by-country reporting is basically to create the transparency for big multinational companies. So it might be the case that if you are filing either, reporting or just pure notification in different jurisdictions, it might be the case that here you also need to file notification. But again, it's just a separate reporting. Whereas ESR is basically applicable, as I say, to all licensees who conduct the relevant activity, regardless of their annual consolidated revenue within the group. Now, the purpose of ESR is to basically to make sure that if you have entity here or presence here in the UAE, there is a real economic activity here and not just purely for aggressive or harmful tax structuring.
Understood.
I just want to add something that you mentioned about the connected person. Now, I do agree with you that control is a key here, because if I look at the regulation now, it needs that they also mention direct and indirect ownership or control. So this is something that we need to, again, I would say to look at it from substance over form, especially if you also have certain nominee arrangement, nominee shareholdership and so on and so forth. So something that we need to look at in the much closer way.
Okay, great. And I think this brings to my head a last question. If we have two entities in UAE and one of them is assuming the headquartered businesses, and there is an intra-finance agreement between those entities for the reported year for a certain percentage in return or interest, which is 2% for an example. Would this require a separate filing? I mean, would this qualify first for the notification of ESR? And if it does it require a separate filing under this separate category, or how does it work?
I think we need to look at the documents first, Sarah.
Okay.
We need to really have a close look at the documents.
All right, sure. Thank you.
In the interest of time, maybe Marcus, this last question I can see on the chat box here is, do we need to file the notification for branch license as well?
Yeah. Michelle, I will. Would you be able to answer this, because I believe we can just take one of the FAQ answer from the Ministry of Finance.
Well, if you look at the definition of what is a licensee, it is not very clear whether it is an entity or whether it is a company that has a trade license. Personally, I would say to follow the approach that if you have a trade license, even if you are a branch, then you need to file the notification. Because there is no harm in just filing the notification and taking a conservative approach here. But as I said, that's not clear from looking at the law and the guides. So that would be my recommendation.
Michelle, just to add that one, because I believe it has been clarified by the Ministry of Finance on that part. We can we can give this answer per email if we get it an email. Just want to see this.
Sure, Marcus.
Okay. Thank you very much, Mr. Das, Michelle, and Marcus for sharing your knowledge. I hope everyone enjoyed and have enhanced their knowledge through our webinar. We believe in sharing and caring for the people who are associated with us, and we will continue to do so in the near future as well. We plan to host many such webinar and share the knowledge that we have. The important thing to note for everyone, or a takeaway from this presentation, is that we need to be mindful of the deadline for the initial notification. Different different free zones have different deadlines. In BIFC, it is 12th of June, and we request everyone to be mindful of the deadline. And before you put on the notification on the portal, you should assess and evaluate the relevant activities, and accordingly you can populate the notification request. Should you need our assistance in any way, we are open. Our office is also open now, and with a limited capacity, we are working from office. And anyway, we are reachable on our mobiles and emails at any time. So with that, I thank you all for participating in this event, and look forward to stay connected and welcome you all at our office as well very, very shortly. All right. Thank you very much, everyone.